A very warm welcome to IDFC First Bank presents Leaders of Tomorrow Season 11. I'm Ritwika Gupta. Tonight, as part of our Wealth First edition, we'll be discussing investment strategies and simplifying finances for entrepreneurs. To understand the evolving role of a wealth manager, I'll be first chatting with Rajesh Saluja, CEO and MD, Ask Private Wealth. And in the second segment, I'll be chatting with Anant Ladha, founder Invest Aaj For Kal, about asset allocation, managing debt and much more. Listen in. Hi Rajesh, thank you for joining us today on Leaders of Tomorrow. So your recently released report, Ask Private Wealth, HURUN India Future Unicorn Index 2023, identifies the most promising Indian startups that are on the track to become unicorns in the next 2 to 4 years. Could you share the key findings of this report, like which sectors are leading and which cities are projected to have the maximum number of unicorns?
Sure, thank you. So firstly, the objective of this report is to highlight India's fast-growing startup ecosystem to both investors, governments, family offices, aspiring entrepreneurs, and the international community. I'll just share quickly some of the key findings. First, let me begin by classifying, or telling you how we've classified startups. One, of course, unicorns, as we call them. These are founded after 2020 and with a valuation of $1 billion. Then you have gazelles, which are likely to become unicorns in the next 3 years and maybe currently valued around $500 million. And finally, it's cheetahs, who will become or likely to become unicorns in about 5 years and currently valued at around $250 million. So that's how we classified potential companies. Key findings from this year's report is, first, of course, India is the home to about 83 unicorns, 51 gazelles and 96 odd cheetahs. More than 80% of the startups achieved unicorn status from our last year's report. 24 from this list turned unicorns last year and 3 have turned unicorn this year. We also found that 8 gazelles got demoted to cheetahs and 18 actually dropped out of the index due to the funding winter. The entire list of companies on this Future Unicorn Index are worth close to now $57 billion, which is a 16% year-on-year increase. And this has happened also largely due to addition of new future unicorns. Bangalore was the startup capital. 53 of these companies are from Bangalore, followed by NCR at 29 and Mumbai at 19. So these were the key highlights of the report this year.
Rajesh, tell us how HNIs or investors should approach the report in terms of making investment decisions on these startups.
So when it comes to wealth management or looking at HNIs, ultra HNIs, our advice as wealth managers is to really identify good quality funds, private equity, venture capital funds run by credible fund managers with a good track record to take exposure to these startups, because directly investing in startups come with their own risks. In terms of your ability to get details of how the business is doing and track it on a regular basis. So our advice is to really participate in these investments through good quality fund managers, and that's what we bring to the table, identifying fund managers who are really participating.
Rajesh, what advice would you offer young entrepreneurs, or startups who are facing challenges in securing funding for their ventures?
Not to give up. It's just a short winter. Winter passes and you have summers. And I think we're also at a stage where interest rates globally are peaking out. So you will see more money coming back to fund good quality businesses. And during the funding winters, or if funding itself is a challenge, focus more on tightening your belts, focus on costs, look at paths to profitability and not just growth. These are the things that I would recommend to a young entrepreneur.
Now, Rajesh, if you could also tell us what is the role of a wealth manager today and how has that evolved over time in response to changing market dynamics, technology advancements, and perhaps even evolving client needs?
Role of wealth manager, more than giving returns, is how do you manage risk. And as markets become slightly more complicated in terms of number of financial products that are available for investing, our role is to ensure that we are doing deep homework and ensuring that we are bringing only the right solutions to clients. Also, using technology and artificial intelligence especially to aid decision making for client portfolios in terms of optimizing their returns with the lowest amount of risk. And third, I would also say that creating good quality phygital models that is a combination of relationship managers who are personally meeting clients, but they are being supported by digital tools to improve the way they offer or to institutionalize the quality of advice that goes to clients. These are 2 or 3 changes or trends that are happening. Of course, you can break the market into new gen and old economy. New gen is more engaged digitally, while clients who are slightly elder and have larger wealth tend to have a larger sort of interaction physically.
Tell us, what are the common mistakes people make, Rajesh, when it comes to managing their wealth, and how can they be avoided?
One key mistake always is to forget that inflation and taxes actually lead to destruction of wealth over a period of time. If you have too much of exposure in fixed income, or you are not investing in growth assets, over a period of time, the value of your wealth is depleting. So many allocate too much to fixed income, and they need to enjoy the growth story of India through equity investing also. Second big mistake is investing in products that they don't understand, or they have no idea how those returns will be generated, because the industry does come out with complex and innovative products, but innovation does not mean returns. In fact, we believe the more boring the investment is, the more time tested it is, the better chances you have to get your financial objectives met. So not going into too many complex and innovative financial products. And third is having diversification across all asset classes, not being overtly invested in real estate or equities or fixed income, but having the right balance which can make you sleep well at night and still help you meet your stated objective.
In the context of a volatile market, how should one approach asset reallocation, to effectively manage risk and also optimize returns? What would you like to say?
So asset allocation calls are more important than timing the market. So when markets are volatile, sometimes people tend to remove money or get fearful of the future. And our advice as a wealth manager always is to try and rebalance portfolios whenever there is market volatility. Initially, when you sign up a client, to give you an example, if he's got 100 rupees divided between equity and fixed income 50-50, you may create a framework to say that anytime the value of his equity goes beyond 60, we will trim, or if the value of the equity falls below 40, we may add. And basis that asset allocation, what we call as a tactical or a strategic asset allocation decision we've taken, you may rebalance the portfolio whenever such market volatility takes place.
Finally, Rajesh, tell us, how do you see the rest of the year panning out for investing, and what would be the key risks to take note of?
We are quite excited about India's growth story from a medium and long-term perspective. In the short run, I think we are watching how interest rates pan out. In India, you're already seeing interest rates being paused because inflation is under control. In developed markets, there are still some more rate hikes, but the days of aggressive rate hikes are over. So our belief is towards the end of the year or early next year, rates will start looking down, and that will give a significant positive impact to equity markets, and especially India, compared to many of the other markets. The other risk that always remains is geopolitical risk related to what's happening in China, Russia, many other parts of the world you have to closely watch. But having said that, India's structural growth story is so strong in this decade. I mean, if you look at discretionary income, we've crossed $2,500 per capita income. Any country that crosses that, the consumption, then discretionary consumption then goes up quite dramatically, and you see a serious period of consumption stroke growth. If you look at our fiscal position, the way we managed COVID, the way we managed our finances, if you look at the investments that are coming into India, if you look at the focus of government spending on infrastructure, etc. I mean, I can go on and on about how the next 10 years is probably a golden decade for India. So while interest rates and geopolitical sort of risks you'll see and watch and see how they turn out, but having a slightly long-term view and remaining invested in the Indian growth story is going to reap rich dividends. I think more money will come into India and more wealth will be created in India than ever before.
Well, thank you for your time, Rajesh. It was lovely talking to you.
Thank you.
It's time for a quick break here. When we return, we're in conversation with Anant Ladha. Stay tuned. Welcome back. You're here with us on IDFC First Bank Presents Leaders of Tomorrow Season 11. In this segment, we'll be talking about investment strategies and financial goals for entrepreneurs. Joining me live right now is Anant Ladha, founder Invest Aaj For Kal. Hi Anant, thank you so much for joining us today.
Thank you so much for having me on the show.
So you're an influencer, a best-selling author, and of course the founder of Invest Aaj For Kal. So I want to kick this off by getting some insights into your background and what really motivated you to pursue a career in personal finance advising.
I don't know why, but from starting, I was always excited toward financial markets and financial stuff. I see a lot of people, especially a lot of students, watch Cartoon Network in their initial age or maybe in their childhood. Instead of Cartoon Network, I always joke that instead of Cartoon Network, I always used to watch some or the other news TV channel at my home because of the environment which was provided to me, because of which my interest in finance field started. Right now, what happened was my father was already doing a broking and a mutual fund distribution business. I found that there is still a lot of scope in financial literacy, and I feel that a lot of people are still not financially literate in India. So with that mission of spreading financial literacy, I started and launched a physical session, free financial literacy session in 2016, which even got recognized by Rajasthan government later on. After reaching a certain number of people, around 25,000 people physically, I realized that what next, how to reach bigger people and help more people in becoming financially literate. That is where our online initiative of Invest Aaj For Kal took birth, and we started spreading financial education in a digital manner.
Anant, what guidance would you offer to young entrepreneurs who are facing challenges or are aiming to excel in finance-driven startups?
See, if you want to do anything in finance field, firstly, it's an amazing field to work with, especially in country like India, where penetration of finance as a whole is still under-penetrated. You have a lot of opportunities, but you need to take care of a few stuff. I will note down or maybe point out 3 important points. Firstly, you should not come into finance field just because you are getting attracted by some financial influencer or maybe some Instagrammer or maybe one of your friend who is doing well in finance. You should come in this field because you have a problem and you have a solution for that problem, and you should be passionate about that solution. This is the first important point which you should take care. Second, it's a long-term game. You cannot expect to make it big overnight in financial field. You need to give time. It's time. It will take some time, but if you give that time, you will probably make it big in this field. And final important point is you should be ready to work hard and study a lot. If you are not interested in reading a lot of stuff, or maybe reading a lot of newspapers, then finance field is something where you won't be able to excel. You should be good at reading and understanding new stuff and new financial education. See, best part about financial field is that it keeps on evolving. So you also need to evolve in almost every 6 months to 1 year. If you are ready for that evolution, this field is amazing to work in.
So with regards to current market conditions, characterized by high returns, which sectors do you anticipate will experience growth and offer benefits to investors?
See, if you talk about growing sectors in India, India as a whole is growing. So you can pick up any sector and it will grow, be it consumption story or be it infra story. But I personally find two sectors very interesting. First is infra. I like infra because even if we check out this year's budget, we see that almost more than 2% of our GDP's allocation is done in infra. More than 10 lakh crores rupees was allocated to infra. And if government want to spend on infra, obviously infra as a sector will grow. And anything related to infra space can shine in coming times. This is first sector. And second sector is BFSI. Obviously, banking, financial services and insurance sector is under-penetrated as of now. Banking finally is getting some roots in rural India. But still, I feel that BFSI as a sector can continue to do well. And it is usually seen that in all the developing countries, BFSI is an attractive sector. So these are two sectors which I am personally liking from investors' perspective.
Right. So from an investor's perspective, could you perhaps also give us the reasons behind the significant performance of the Indian markets, and what do you think are the implications for the country's economy?
It is basic accounting which you have to take care of, and you will understand that India is probably gonna have one of the best decade in next 10 years. See, accounting says that someone's income is equal to someone's expenditure. Basic accounting, I think everyone knows about it. So if we want to increase income of an economy, we need to increase expenditure in that economy. This is the first basic principle which we have to understand. Second important point is, if we talk about India, India is a very young nation. Average age in India is around 28 years. And youngsters spend money, and someone's expenditure is someone's income. And if there is a lot of expenditure in the economy because of youngsters, India is bound to grow in coming time.
Anand, at this point, I'm also interested in your perspective on borrowing and managing debt. Could you perhaps outline for us what has been your approach?
See, let us divide borrowing in two parts. First is borrowing as a business house. Second is borrowing on a personal front. If I'm borrowing as a business house, I just have to ensure that the cost of borrowing is less than 70% of the cost of returns which I'll be generating because of that borrowing. For example, if I am generating 12% return normally in my business and I'm borrowing at 8% or 8.5%, it's obviously good to borrow money in business, because then you will have better rate of returns of the total investment which you are doing. And it is absolutely okay. Business borrowing is something which is good, provided you are not over leveraging, you know your limits, and you are properly paying your dues. It's absolutely okay to have borrowings in business side. Also, when you do a business borrowing, you get expenditure. Whatever you are paying as interest is your expenditure, and you get income tax benefit also. So business borrowing is absolutely okay. If I talk about personal borrowing, you are borrowing for your home or maybe for your higher education, it's absolutely okay. And these are good borrowings because you get deduction in income tax. For example, for your home loan, you get deduction in section 80C. For higher education loan, you get deduction in section 80E. It's absolutely okay to borrow for these things. But if you're borrowing for a car, which is probably your liability, I feel that you should double check it and you should try and avoid such debt. If you're using credit card because you're getting some benefit, it's absolutely okay. But if you are using credit card and it has become your habit to stay on debt and you are falling in debt trap, there is a big warning sign which you have to take care. So these are some of the pointers which you have to ensure while taking a borrowing. Otherwise, if you have a proper check and if you have a proper pointers of which all borrowings you can take, it's absolutely okay to take borrowings.
Right. And speaking about financial goals, Anant, I would like to ask, how can entrepreneurs effectively balance business investments and their personal saving goals? Is there a one-size-fits-all formula?
See, if I talk about today's term, just ensure that you are having positive inflows every month, and it's absolutely okay. Right now, we see a lot of people and a lot of businesses just trying to imitate some big startup, and they are burning cash every month. Don't do that. Especially if you're starting a new business, just ensure that you are maintaining a positive cash flows. Everything else will eventually fall in place. don't fall in a trap of valuation game, because valuation game can burst anytime. And just because XYZ startup is getting a lot of valuation and they are burning cash, you say that I will also burn cash. That is not a right choice, I feel. Everything else will be taken care of. Just don't be negative on your cash flows.
Anant, what are some strategies, according to you, should entrepreneurs employ to manage debt and mitigate excessive financial risks?
If you can manage that, it's absolutely okay. Just ensure that at least whatever returns you are getting on that debt is more than roughly 130% of the total cost of debt. This is the basic formula which I use. If you are taking debt at 10%, you should generate at least 13% return on that debt in your business. If that is the case, it is absolutely okay to take debt. But if you are taking debt at 10% and the rate of return which you are generating is maybe 9%, 9.5%, 10, 10.5%, 11, 11.5%, you should probably avoid that debt. This is my basic formula which I use in my personal business.
Well, finally, I would like to get your thoughts on asset allocation. How does one approach it? Is there a perfect asset allocation strategy?
See, if I talk about perfect format, there is no perfect format of asset allocation, because we say that we call this complete subject as personal finance, because it is very personal. It completely depends on your personal mindset. But yes, asset allocation is something which will help you in difficult days.
Thank you. It was great chatting with you, Anant. And with that, it's a wrap on this edition of IDFC First Bank Presents Leaders of Tomorrow Season 11. We hope you enjoyed the conversations. Thank you for watching. Good night.